Welcome to Revelations for Tuesday, March 3rd, 2026. I'm your magnificent trading guide, Tom Sacred Prophet Hartman, here with my acting first acolyte, Peter Bad Guru Hartman. On Revelations, we recap the day's trade setups, the wins, the sins, and the black swans, as well as what we're watching for in the days ahead, all to teach you, the congregation, how to trade. So, like, follow, and listen because the next few minutes might just change your life. Peter, the war, the US Iran war heats up. But what do we care
Heats
about?
up. When it heats up, it started out hot.
No, they closed the Straits of Hormuz, and now oil is like
Oh no,
skyrocketing
the
because
streets are closed.
they stopped LNG gas to Europe, grounded a bunch of flights all over the world.
Oh my god.
Uh, it's getting bad. Who knew that World War III could be so inconvenient and so profitable?
Is it profitable?
It's profitable to some people.
That's so bad. I didn't know all that was happening, but
Oh, even worse. Peter, even worse things are happening. Oh my God. You're in the fourth turning, mon frere. And I've been promising you volatility. And here it is. Beware the Ides of March.
so what's the market looking like?
To the charts. So, let's just start off here talking about the dollar. Why do we pay attention to the dollar so much? Tom, why do you talk about it constantly all the time? Well,
Whoa,
looky here.
look at
We
that.
had the dollar. Let's even just take off these things. So we've been talking about the dollar being at the edge of this channel for a long while, for weeks now. We had the dollar fall below this area, and then we had to come back up and test it once, twice, and then we had this flag over here. So you remember, Peter, we've been mentioning this, that this means that one of two things is going to happen. Either we're going to fall down and we're going to have a rally in equities, or we would jump up into this range. Well, that's exactly what happened. Not only did we jump up into the range, we jumped all the way up to the top of the freaking range, buddy.
Crazy.
Right? Whenever you see these coiling things, these coiling patterns, and this is why I call charts a divination tool. When you see these coiling patterns, it means something's going to happen. You don't know what, you don't know what direction, but something has to happen because the markets are aggregated information across the entire information space, and somebody knows something, and that information gets reflected in this way. This is not the only place. This is what we've just been paying attention to. But let's say inside of the option space, we saw rumblings that people were taking bigger bets towards the downside, protection against the downside, even though the price hadn't moved.
Mhm.
Well, who's willing to pay higher and higher insurance premiums and millions of dollars to billions of dollars, if not people in the know? So you can always use these things as a precursor for things about to happen. But look, you guys are baby bird traders. Let's feed this to you little by little. Now that we're at the top of this trend, the idea is that, do we stay now in this range, or do things get worse and we break above? If we break above here, that's tough because the next level up, I mean, there's no, we could go all the way up to 129. Like, there's no reason why this couldn't move up like this. Like, there's no reason that couldn't happen. So we're gonna hope that we stay inside of this range over here, and then look for how price action works. But we'll wait to see what the next signal is. So suffice to say, we've been having some volatility inside of markets. So if we take a look at the trades for today, I came into the markets today totally expecting I am not trading, right? I'm sure you guys can rattle off why I'm not. Over here at open, we were basically right at the daily VWAPs from the day before. And when I'm right at the daily VWAPs, I'm not looking to get into a trade. Not interested in that. I like perfect setups. You know me, I like perfect setups. I don't like chasing. And even though a big move did happen in the overnight, I wasn't awake to see it. So I didn't get to take this trade. If anything, I would have tried to go long over here, but I only like going long here at the daily VWAP, the furthest daily VWAP. If we started off like higher, if we started off higher and then we came down here, okay, then I would want to bounce up. But if we're not going to get that, I'm not interested. Plus, we had the dollar in an uncertain period. Now, in the overnight, we stayed beneath the VWAP the whole time, and then as the New York session opened, we had this V up from the bottom where we moved up a little bit from 6 to, let's call it 8, and then when we opened up on the first candle, the 50-minute candle for the Nasdaq, it was just, look at that. What do we call that? A tombstone? Look at that doji. Look at that uncertainty. Look at that wick.
Wow.
Interested. Now, what I did tell everybody on Price Action Live, if you guys were trading with me live on Price Action Live on the Traders Post YouTube channel, which I am there every Tuesday to Friday, 9:30 a.m. to around 10:30 trading. I said if I was going to take a trade at all, I would take into consideration that one, we are in this downtrend. So the VWAPs for that day, the overnight VWAP and the daily VWAP are in a downtrend pattern. I'd be looking to take shorts. And because of how close these areas are and the high volatility, I would take a short from overnight. So every overnight point was a great area to take a scalp short. Well, not everyone, but before the 10 a.m. trend.
What would have been your downside target?
That's it. I even said this on Price Action Live. I didn't really have a downside target. I mean, I am aiming for this weekly level at around 26,960 that I've been calling out for a while now. But we also had two other issues. One, yesterday we had a whiff of the daily level up here. We never actually got to that daily level. And when we have a whiff of a level, it means that level is still in play. Plus, we had volatility increasing. So we had the VIX up. If we take a look down here, we had the VIX up. And so the VIX is this red line here. So volatility, VIX had gone up to 23. I think that's one standard deviation above the mean. And then we also had the MOVE index, which is basically the VIX, the volatility index for bonds, also went up. So when we take a look at bond yields, they ticked up for the day. Now, in order to get bond yields to move dramatically, bonds are the biggest market on the planet. Don't get it twisted. All right? Bonds are the biggest market. Trillions upon trillions upon trillions, hundreds of trillions of dollars, or up to like 100 and $125 trillion or whatever, is based upon the derivatives of the bond market, right? Because it's, imagine cash, the cash that you like, imagine cash, which is what everyone's working for, right? Cash. But your cash is an infinite duration bond with no interest rate. That means it's a liability, right? The government technically owes you whatever $1 worth of gold. You're not getting that gold. So it's an infinite maturity. We'll pay you back, but never. And you get no interest on it. In fact, it's a negative interest rate because of inflation. You're losing money. They're aiming for 2%. Bonds have a maturity. So at a certain date, they have to give you that cash. 2-year bond, 6-month bond, 10-year bond, whatever. They got to give you that cash. And two, they give you an interest rate. So what do you think most of the planet, where they park their money? You think they park their money in cash? You think the central banks are sitting on a bunch of cash? No. They're sitting on bonds. Well, if the entire global economy, because it's the world reserve currency, is sitting on bonds, well, when bond yields suddenly move up like this, that means the value of the bonds, the dollar amount for the bonds, if they wanted to cash in those bonds right away, are going down. When interest rates go up, bond prices are going down. The value of bonds are going down. Why? Well, because if I have a bond at 3%, and now someone else can get a new bond at 4%, why the F do they want my bond at 3%? I got to sell my bond cheaper. So this is all volatility all over the space saying, hey, there's problems. People, even in safe havens, people don't have a problem with it. All while the dollar goes up, and the dollar goes up. Why? Because people go, forget your bond. Give me that money right. I want that cash right now. Right? They don't normally want to hold cash, but they go, look, I don't know what's going on. I have a promissory note that you're going to give me cash in the future. I'm going to need the cash right now. Let's sell these assets. I'm going to need some cash right now because I got bills to pay. I got things to do. All right, so the dollar goes up, equities go down, makes sense. But what do we see in markets today? We saw a drop, but we didn't actually give the drop all the way down. Peter, you know how many times here I wanted to go short? I wanted to go short, and I go, I can't go short. I have a whiffed daily level above me from yesterday, or that I almost touched yesterday and didn't hit. I have massive volatility, and volatility works both ways, folks. Volatility means you can have massive price moves in either direction. We have negative gamma, hundreds of millions of dollars worth of negative gamma, and we have event shock. We don't know what's going on. We could be sitting there and all of a sudden some new thing happens. Hey, the peace in the Middle East, or some new bombing or whatever. We have event risks all over the place. These are black swan, folks. So why would I get it? Why would I do that? Would you get in a ring and fight with another MMA fighter? They go, we're just going to turn the wheel, and whoever you land on, that's who you get. I'm not going after Habibi here. I'm not interested.
Habibi. Okay.
I don't know the names of the fighters. Give me Joe Rogan. I don't want
Muhammad Ali.
No. The MMA fighter Habib. What's his face?
I don't watch that stuff.
Give me Mike Tyson. Don't give me
George St. Pierre. George St.
Pierre. I don't want George. Hey, so that's what it is to trade in this sort of thing. You don't know what's going to happen. Why do you want to give away your money? No, thank you. Even if you waited for the 10 o'clock trend. So here at 10 o'clock, the trend did start. You can see this candle, and you can go ahead and hold this. Fine. But I didn't. None of my things were saying bullish. Nothing on my chart was saying bullish. So the price movement can move. I don't know why it's moving. I'm not going for it. In fact, we went all the way up to the weekly VWAP. That's this line over here, this weekly VWAP level. We bounced around it for a bit. Then we climbed back over, came back and retest. But even at the end of the day, we came back and we're still on the heels of the weekly VWAP. So all this is very suspicious. None of these are my perfect setups at all. And so I don't trade. Because what's trade number 4? Not trading.
There are 4 kinds of trades: trend, partial trend. Forget what the third one is. Scalping, and no trade.
Exactly.
Scalping.
Every other trade you're talking about of underlying assets fall in there. If you're going to be dealing with options, well, then you have all kinds of different strategies you can take. But even then, you're trading volatility. You're not even really trading the underlying. But Peter's not there yet. Peter is just an acolyte and an actin first acolyte. We don't want to. We want to be too heavy for you here, Peter. All right. The last thing I want to mention here is for another thing that gave me pause was the metals complex, where big gold and silver fell. So gold fell pretty significantly. This was what was this candle on gold? Almost 4% down on gold, and then silver did silver did 6% down. So it's like, okay, what's going on? If for flight to safety, why isn't gold and silver being a flight to safety as well, or at least gold? So all this stuff made me like, I'm not sure what's going on. So we take a look at Bitcoin as our final thing. You'll notice here that Bitcoin didn't actually move too much today. I mean, it did drop a lot and came back up, but we're basically, slightly down for the day, down 74 basis points, but that's not a lot for Bitcoin. Bitcoin is actually sitting on, if we turn on waves right now, Bitcoin is actually sitting on a confluence of waves that are coming in. So this is a confluence of waves that are coming in. So you see the monthly, the weekly, all kinds of waves are coming in, and it's staying flat. So what happens is that if this continues, I would not be surprised to see a rally in Bitcoin. Yes, a rally in Bitcoin. I can't believe he said it. Rally in Bitcoin. Just like over here. So when the moving averages come down and they converge, and we stay low for a while, you can get a rally up until this trend line over here. So I can expect to see, I would not be surprised to see Bitcoin rally all the way up to like 81,000, even touching this weekly level at 84,000. I would not be surprised to see that.
Bear market over.
Can I see a 22% rise in Bitcoin? Absolutely. What would I do if it gets there? Short it. Short it to hell. Because on my long-term price of $50,000 to $55,000 range that I'm aiming for Bitcoin, and there's no way I am turning on that idea until we get above, let's say, 100,000, 97, 100,000, and or if there's news that that really materially changes the amount of liquidity that's being pumped into the system. Peter,
Tom.
it feels good not losing a bunch of money when I know, looking at the chart, I would have lost everything. Any questions before we let everyone go?
No, I think that's
Great. So we'll be back tomorrow at 5 p.m. with even more revelations, answering your questions and looking into the future.
Are we looking into the future?
I want that to be the tagline.
That's the
My sign off.
tagline.
That's my
so
sign off.
lame. So lame.
Into the future.
No. Mm-mm.